Okay, so we're going to talk about cash flow management because profits are great, but you can't take percentage points to the bank. We take cash to the bank. And we've seen in a lot of different ways where cash and income aren't necessarily equal. So cash management 101, we want to understand our cash so that we don't bounce checks and incur nasty fees. We want to make sure that we have money in the bank to pay our bills. And it's helpful if we want to time big purchases. So we really want to know what money we've got and when it's coming in and when it's going out so we plan those big purchases. So how do you know what you got? We can look at a couple of different places. We can look at your bank statement that you get once a month. You can go online to look at your bank balance, and you can also look at QuickBooks. The big question, of course, is who do you trust? Do you trust your bank or do you trust QuickBooks? And here's a classic example where the bank balance says that you have $38,000 and QuickBooks says that you have negative, that you're overdrawn by $1,300. And who do you trust? And I can't tell you how many times I've seen this. So first of all, these things can in fact be true if you look at QuickBooks and compare it to your bank balance. If you're keeping up with your QuickBooks, you may have written a check for $30,000 and the person didn't cash it yet. There's a lag time from when you send checks to people and when they're cashed. By the time you write the check, you mail it, it takes a day or two for the mail to get the check to the person, and it takes them another day or two to deposit the check, and then it clears. So there can be a delay of 4 or 5 days from when you write a check until it shows up in your bank balance. So if you're looking online to see what you actually have, that may not be true. So if you're tracking your funds in QuickBooks and you're doing a good job of tracking QuickBooks, you're going to have a more accurate sense of what you really have. So can you trust your bank statement? And as we just discussed, trusting your bank statement can be difficult because of the lag between what shows up on your bank statement and when checks are written. And actually, this happened to me when I was working in catering, and a client wrote a check to pay off the balance of her bill. And because of the way the accounts receivable worked in the catering company, the check didn't get deposited for 2 weeks. And so she wrote the check. She didn't write down that she had written the check. She looked online to see what she had in her bank, and she spent the money. And then when it came time for us to cash the check, she had no money and the check bounced because she just looked online and it didn't occur to her that maybe we hadn't cashed our check yet. So it can be really deceptive to look at your bank statement and think that that's what you actually have. The harder question is, can you trust your QuickBooks balance? And a lot of this comes into play with what we've been talking about in terms of using sales receipts and invoices to track what people owe you and when they pay you and when you pay them. So it's really important to keep up with these transactions so that even if the check isn't cashed, you know that it's still floating out in the universe and you need to hold on to that money in the bank. It's also important that you effectively track what you deposit from, let's say, PayPal or Square, and that you don't double count. We saw a couple of ways in which we can double count revenue by recording a deposit and creating an invoice. So that might show double in our bank statement and revenue that we don't actually have or cash that we don't have. So we want to make sure that we're really following the cash trail so that we can trust QuickBooks. So how much cash do you have? You can go to your balances in QuickBooks to make sure you stay up to date. It's also helpful if you reconcile your bank statements on a regular basis, on a monthly basis, for all those missed transactions. And I'll be the first to admit I miss entering transactions on a regular basis. So by reconciling my bank statement once a month, it's like, oh, right, yes, I had all those expenses. So you can make sure that you have an accurate reflection. You can also look at your balance sheet to see what you have in your bank account. You can also see your liabilities and what you owe coming up. You can look at your accounts receivable also on the balance sheet to see what money you have coming in. And you can also look at your cash flow budget to see what are you planning to do so that you can get a sense of how to plan for the future. So here's an example of a balance sheet. And we can see that they've got $18,000 in cash in the bank, but they've got current liabilities of $20,000. So what that means is that in the next couple of months, they owe $20,000 to their vendors, to their credit card company, in federal taxes and payroll taxes. They owe $20,000. And they only have $18,000 in the bank. But thankfully, we can see that they do have $18,000 in accounts receivable, which means that they're expecting $18,000 from customers. They've got $18,000 worth of outstanding invoices. So even though they don't have the money in their checking account today, if their customers pay them on time, they probably should have enough to cover all of their current liabilities. So you can see how looking at the balance sheet can really help you with your cash flow planning. So how do you make sure that you get your QuickBooks balance correct? I've said it before, I'll say it again. You want to enter your transactions a few times a week at a minimum just to keep on top of everything. It's helpful if you memorize transactions. So as an example, I have auto pay set up for my health insurance. So every month I have $400 that goes out of my account for health insurance. And I have a memorized transaction in QuickBooks. So it's automatically entered into QuickBooks. And then, of course, you want to reconcile your bank account monthly. So let me show you how to memorize a transaction. I am going to show you how to memorize a transaction. So let's say you're writing a check to, I have Tufts Health Insurance. And I'm going to quickly add this as a vendor. And my health insurance, let's say, is $400. And it's insurance expense. And then when I go up to the top ribbon where it says Edit, I can say Memorize. And then I can say Automatically Enter. Monthly, I want the next time to do it to be on the 18th of the next month. And I can click OK. So now I've got the automatic transactions. So every month it's just going to automatically come out of my QuickBooks checking account, and it's automatically going to come out of my regular bank account. So memorizing these transactions is one way to just help you keep up on what you've got going on.